And good evening, everyone, and welcome to our public television viewers. I'm Tyler Matheson. Susie Garib is off tonight, and that is because we are proud to say she is receiving the Elliott V. Bell Award from the New York Financial Writers Association for her lifetime contributions to financial journalism. It's a great night for her and NBR, and we congratulate her. Our top story, aside from that, of course, is the Dow. It surged to a record high close today, blowing past the previous high set back in October of 2007. Now, for its part, the broader S&P 500 closed at a fresh 5.5-year high, and the Nasdaq finished the session at, get this, a 12-year high, reached just before the tech bubble burst back in the year 2000. All in all, a day for the record books. The Dow more than doubling since its bear market low almost exactly 4 years ago. But the question is why? Why so high, and why now?
So why is the Dow so hot when the economy is so cool? Gas prices so high, and consumers still smarting from tighter take-home pay? Well, one reason is this man, Ben Bernanke. The Fed chairman has been pumping money into the system for years, and he's not stopping anytime soon.
In the short term, I would believe that we ought to maintain a reasonable degree of fiscal support, stimulus for the economy.
But is it all Bernanke?
It's not just Bernanke.
Catherine Keating oversees nearly $1 trillion of investments for J.P. Morgan.
Corporate America is strong today. Balance sheets are strong. They're more liquid than they've been in decades. And profits have already surpassed pre-crisis highs a couple of quarters ago.
In fact, since the market's 2009 low, corporate profits have risen faster than at any time since the tech boom of the 1990s. And Dow profits are forecast to rise 9.2% this year and 9% in 2014. Helping, too, is that the Dow isn't the same measure it was back in 2007. Gone from the index are bailed out AIG, Citi, and GM. In are Cisco Systems, Travelers, and United Health. A different Dow for a different time.
To be sure, not every stock is up since the market bottom back in 2009. Hewlett-Packard, alone among the Dow components, has lost money, off 22%. But let's say you had perfect timing and you put $1,000 into the following Dow companies when the bull started to run back in March of 2009. In Caterpillar, which is up 286%, you'd be looking at $2,860 today. Home Depot, $2,910. And in American Express, up a whopping 513%, you'd have a stash worth more than $500. Might we all be so lucky? Well, with the Dow already up nearly 9% this year, even more than it gained all of last year, when the Dow surges so smartly, investors naturally want to know, where the heck are we? Near the beginning, the middle, or the end of a bull market? Bob Pisani now with a history lesson on how the markets reacted following previous record high closings.
So we finally made it. Historic highs on the Dow Industrials. But now what? Stock bulls are saying that this could be the start of a sustainable bull market that could last for several years. Their main arguments? First, the Fed is backstopping the economy through low rates. Second, the economy is slowly improving. Third, earnings are at record highs. Fourth, there's record cash on the sidelines, both from individuals and from corporate America. And finally, with rates so low, there is just no other place to put money right now. But there are plenty of headwinds that could prevent another bull market from developing. Bears point to sub 2% GDP growth that is constraining job creation, anemic revenue growth for corporations, and the threat that the Fed may remove its stimulus program well before there is robust economic growth.
But the biggest threat to the market's advance is also its biggest hope, and that's Washington. A bigger deal on tax reform and entitlements, as well as an extension on the debt ceiling, would go a long way toward boosting business confidence. Spending and hiring would likely increase then. Conversely, the failure to do anything in Washington will also weigh on the markets. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.